So the market just rallied to new all-time highs. We have easing geopolitical tensions and some trade optimism despite hurdles. Also, the US economy data is a bit, well, mixed. But we're hanging in there. We have some new IPOs and Nvidia is ripping again. As I said, S&P 500 and Nasdaq hit all-time highs. Also, new all-time highs. Some de-escalations in the Middle East and trade optimists are just plunging into the market. Ladies and gentlemen, welcome back to Wealth Down with me, Norbert PM. Today we're going to discuss major economic news of the last week. Also, we're going to discuss a couple of earnings. For example, Nike is turning around there. I don't think it's turning around, but they did have some good earnings and some medium outlooks. Nvidia just keeps ripping, so let's just take a look at each and every major story, and then we're going to go through my portfolio because I made some changes. Also going to talk about almost each and every stock, and I have one stock there's nobody talking about that had a major run in the last couple of weeks, even months. So let's get started with the S&P 500. I took a couple of notes, so it was arguably the most significant news. Both the S&P 500 and the Nasdaq indicators reaching new record highs, with the S&P 500 up 3.4% and the Nasdaq up 4.25% at the end of the week. The Dow Jones average, industrial average, also saw a sustainable gain of 3.8%. And this broad market rally significantly stronger this week. So let me take a sip of coffee because it's in the morning here where I'm recording right now. Now, the de-escalations in the Middle East. This is really interesting. We have, let me just show you something here, a heat map. Let's go to our heat map here in our Wealth application. Let's go to the oil producers. Energy. These are actually, the refineries. And they are not the drillers, but here, Oxy is refinery, driller, Fang is Fang, which I saw this major downturn and I was hoping for much better news, but hey, who would have thought that right here is where the downfall started. So oil exploded before the attack, so before the escalation, and then on the escalation between Iraq and Israel, it soared up. But then one bomb later, or actually three or five bombs later, the US solved that problem and oil plummeted. So here's what I did on Monday. On Monday, I bought a short on WTI. So let's check out Monday. There's Monday. And I took with it this little fall down, and then I sold out of it. Why? Why did I sold out of it? Why I took the turnaround, that's pretty obviously why I bought that short position. Go away, cat. What is not obvious, let me just copy this here. Boom, WTI oil futures is much better. So why I sold and did not think there's going to go down here? Well, I could see a little bit of back and forth until that happens, but I do see oil at the range of 60, and there is where I buy. So somewhere between 55 and the current price is where I would buy oil once more. And then just wait. Let's see what happens. On a major spike, I would short oil once more. Now, the major producer, for example, Exxon, let's go to, I'm not even going to go here. Let's go here. Let's go to Exxon. Let's see its forecast because it is, let's go here to a year-to-date chart. It is hovering around there. Also on the 1 year is a bit down. On 5 years, it's still hovering around here. So the forecast for Exxon, for example, is an average of plus 12% for a year, which is not bad. Everything that's above 10% is interesting for me, but it also has a minus 30% probability of going down. Now, if you take a look at their reports, there are, well, exactly as a stock, just hovering around there, actually declining. Q1 saw better results than, or reported $1.76 US earnings to the estimated 1.75. And they do to report Q2 just in a tinge here. So I will not be a buyer of Exxon unless oil hits that threshold. It does pay a really good dividend. Let's go here to financials. Why am I not signed in? Okay, there we go. So it does yield a dividend of 3.62%, but let's be honest. If we take a look at the chart, let's go to a super chart. If you take a look at this chart, it's just, this is not what I want to see for a dividend paying stock, just hovering around there, actually being underneath its 200-day moving average, and it has crossed. So the 50-day has crossed the 200-day moving average. I will not be a major buyer of oil, not yet. So just wait and wait that opportunity. Somewhere here, somewhere there is an opportunity for a long time holding. What I mean, long time, at least 1 year holding of oil. Okay, so if you don't want to invest in the oil directly, if you want to invest in a company, Exxon would be that company. It's not Chevron. I would just take Exxon. Okay, so let's close up oil here. Let's move to, oops, yes, leave this side. Let's move to also, let's end this with the de-escalation. So the major catalyst for the market's ascent was the report of the ceasefire between Iran and Israel, and which significantly is the geopolitical consensus. Now, this de-escalation helped alleviate fears of disruption over the global oil supply. So let me just explain something really important here. It was not the fear of closing of that juncture. It was more the fear of what would it cost. So what will the insurers charge the exporters or the tankers? Because that massive amount of oil needs to be transported. So that was the first major issue. That is why oil spiked and then it dropped. After the insurers, first of all, they doubled their fees. That's why they spiked, because they saw this potential threat back in, let's see here, and something we're here in July, the start of July. And then when it de-escalated, the prices dropped once more. So as a direct result, WTI crude oil prices fell substantially and dropping about 13% to the current price of $65 the barrel. Now, let's just go into so this was the catalyst, and then trade optimism with some caveats, of course. Reports of the Trump administration of a significant trade deal with China and hints to a possible agreement with India fueled optimism about a global trade. Now, this position, this positive sentiment significantly outweighs some negative developments, because we take a look at the financials of the US stock market, it does not look that great. Because the mix, let's get into our next topic, the mixed economic data and dovish Fed outlook. Here we saw the news that, well, Trump is looking for a replacement for Powell, which will not happen that easily. Powell can easily sit out his turn. So let's just talk about the inflation data. First of all, the PCE price index, the Fed's preferred inflation measure, actually showed a moderate uptick in May. Now, with the core PCE, excluding food and energy, of course, rising slightly more than expected. However, consumer expectations for inflation actually plummeted in June. We are looking for July right now. Now, likely due to the softening of fear about tariffs. Now, and we can see that companies are eating tariffs. So if the companies will not eat tariffs, then inflation will rise. If they would eat tariffs, then inflation will, it's already falling. But they're eating the tariffs. That means that their margins are being reduced. So we're going to maybe see an impact on this in the markets. But how much of an impact? Because why isn't this that significant? It's not that it's significant because the story is an AI story and it is an energy story, not a consumer story. So that is why the major, as you can see here in our heat map, the major winners here are still AI. Also, Oracle had a message. Take a look at Oracle. Let's just take a quick look at Oracle in the last month. 30%, almost 30% with a slight. Though it was 30%, 30% gain. Year to date, it's at 25% 4%, and over the turn of the year, it's at 50%. So massive gain for Oracle. And that is data harvesting, data storage. Now, strong durable goods order for May is suggesting a significant surge in demand, indicating a rebound in the business investment, particularly in commercial aircraft bookings. But the Fed stand, well, despite some inflation, takes dovish comments from the Federal Reserve Office continue to significantly increase the possibility of a gradual Fed rate cut. So the prospect of lower interest rates makes borrowing cheaper for businesses. That is why it's so important that the Fed cut those rates, but generally also will stimulate the markets. Now, the CME Fed Watch tool shows a 92% likelihood of at least one rate cut by September. So we are expecting 2 rate cuts this year. Now, we are expecting 2 rate cuts. How high those cuts will be, that's the question. Because it doesn't matter how many rate cuts they're planning, because just think about it. The European Central Bank already cut rates so often. They're back now at 2%. I think Europe is in a recession. Germany is 100% in a recession, although the DAX is at all-time highs, or it was at all-time highs, and now it's trying to get to new all-time highs. So, I don't know, finance. Now, let's talk quickly about a couple of corporate earnings, and let's go to our little signal here of Nike having a massive jump of 20%, reporting some good earnings. Don't forget, Nike yields a dividend of 2.2%. And it's a turnaround story, but don't forget Warren Buffett's saying that most turnarounds don't turn around. So be careful with Nike. I do own Nike in my portfolio. I was slightly up. I was buying this turnaround story, but I was, the difference between being wrong and being too early, none. There's no difference. So I was too early on Nike, meaning I was wrong. And as soon as Nike, it is here, let's just take a look in a RSI and the MACD. So on the MACD, it's on a buy signal, and it popped over the overbought position here on the RSI. So it could go a bit further. And on that signal, I'm going to remove Nike from my portfolio. It was also such a small position, 0.67% of my portfolio is Nike. I'm going to remove it. So one less major news. The IPO of Circle, which also bought it then later this week, so it IPO'd a bit sooner, but so initial public offering, for those of you who don't know what an IPO is. So it's interesting. I bought a little Circle here. Circle, there we go. So Circle, I bought just a tinge of it. I'm at 0.85% on my portfolio, currently down 18%, thinking about buying a bit more and then just let it sit there. Let it marinate. Also, I do expect another pullback in Circle somewhere when the markets will pull back in the seasonally weaker period of the year, which will be September, August, and October, sorry. And then November should give us that Santa Claus rally. Now, this doesn't need to happen. It could happen. Doesn't need to happen. So Circle is one stock that I'm closely watching it for. It does have a bit of a moat, but not that much. What I am watching for, that is Mastercard. Mastercard is the stock that I'm closely watching for. It's already out of an oversold position. This is where I bought a little bit of Mastercard, 7 shares with a medium, I'm going to say it now, in euros, 468 euros a share. This is dollars right here. I have to integrate a converter into the app. And I'm real bullish on Mastercard and, of course, on Visa. I rebought Visa. You know that I already owned Visa like 2 times in my portfolio. I sold it at a major, let's just go to Visa. I know that I sold it right here somewhere. And then did I sold it in February? Yeah. I sold it in February and then I made another top here in June. even new all-time highs. So new all-time highs, back new all-time highs. It had a pullback here. And I think this is going to just go as Visa does, except in this little period of 2021, 2022. But that's what Visa does. And if you want to go ahead and take on Visa, which many companies did, they will fail, as all of them did. Okay, so let's just do a quick overview of my portfolio. Biggest position is treasury bonds, long-term treasury bonds, down on that position 10%, but I'm waiting. I have no problems with waiting what will inevitably come. If it's going to take 2 more years, 5 more years, I don't know. But at some point, the Fed is going to cut rates. And at some point, the is going to hit the fan. And at that point, I'm going to sell out my treasury positions because they're going to be irrelevant. Because they're going to have, from here, I believe, a major spike. So this is just an ETF that I'm showing you. It's kind of almost the same thing as the TLT. It does yield dividends, 4.31, but it yields 2 times a year. So I already have my dividend right now. It was a nice dividend. And I'm waiting. I'm just waiting, cashing in those dividends and waiting for what eventually will happen. I don't know when it's going to happen. I'm not investing in this anymore. But it will happen. Okay, next up, second, with a almost 5% stake in my portfolio is Apple. You know, Apple just not cutting it there. Why is it? And it's recently rebought. So one major sum of 110 shares. I'm just waiting. Apple will do something in, I believe, until the end of the year. And Apple will have a major pop. And that is where we're going to sell Apple again, or reduce it to a 2% of my portfolio. Apple is a cash cow. Apple is selling. It's not growing sales. That's the problem with Apple. But it does have good sales, not that good earnings. And it's a market leader in quality. I have my iPhone. I have my Mac. I'm recording on a PC. And basically that's all I have. An iPhone and a Mac. And I'm happy with them. I don't need a watch because I don't wear a watch. If I'm going to buy a watch, it's going to be something that's going to grow in value. So I would say for a watch that is going to grow in value, a Rolex Daytona would be a watch, or a next level Petit Philippe. But hey, that's further down the road. Okay, my cash position is at 9.5%. And now let's talk about actually 2 major stocks that nobody's talking about, although take a look at AMD. Take a look at AMD ripping here. It's the second, let's just ignore cash, is the third major position in my portfolio. I'm massively down on AMD, 9.38%. I was down even more. And this will be one of those winners. And another one is ASML. ASML is in the lithography market, and actually it's the only one. So the mode is it's the only one. It's like Visa and Mastercard. They are a duopoly, but I am a monopoly. I mean, ASML is a monopoly. I'm also a monopoly. So there can be only one of me. So also Google not making that much. So it's not participating in this rally, but do not discount Google. Come on. Did you see what they did with, they're sending almost each and every search to Gemini. So they're killing the news industry. And there will be a new horizon for Google will rise from the ashes. Just believe me on that one. Now, Novo Nordisk had a major dispute. It had a pop on the news that is going to sell their weight loss drugs through Hims and Hers. I bought Hims and Hers. I bought it on a pullback and sold it completely because the news just came now on Saturday that Novo Nordisk, so they partnered with Hims and Hers. Then after 1 month, they dropped a bomb that Hims and Hers is done. We're not partnering with you anymore, and I think you are undermining our product. And now they're litigating. So Novo Nordisk, a major position in my portfolio. I'm massively down on that position. You can see my portfolio is just red. So why would you listen to me? Well, just wait. I have major surprises for you. That's why. So Novo Nordisk will be the winner in this game with Eli Lilly. So that's the battle for survival is between Novo Nordisk and Eli Lilly. Is just like, I would say Visa and Mastercard, but wait. Okay, Procter & Gamble, defensive position, Intel, a comeback story, but hey, who knows, maybe they will never come back. I'm still waiting for somebody to buy them, and actually that's why I bought Intel's, for the possibility that someone will buy Intel. I still have a major short position on which I'm down 28% on the S&P. I'm waiting for that September, August event. Maybe it will happen. It does not happen, which it should. Then I'm going to take my losses and sell that position. Okay, Realty Income, BYD, I bought a bit of a position here. It's getting massively oversold, so maybe I'll buy a little bit more. And then Truist Financials, I'm waiting for a pop here. I'm going to sell out of Truist Financials. It already has its buy signal, and when the RSI will be indicating that it's overbought, I'm going to exit that position. Not much of a fan currently for the local banks, although there could be, but I don't like the position right now. So I'm going to wait for a pullback and then maybe re-enter the position. So the story which could be is mergers and acquisitions, but not this year. I believe next year or the following year, a bunch of merger and acquisitions will happen. UnitedHealth, take a look at this stock. It had such a major beating. Also, this right here, it's 200-day moving average. So if you take a look at the longer chart here, let's take the super chart. It's down on all-time highs. Now let's take a 5-year. So it surpassed its 200-day moving average, and it was looking here to hit that moving average. And because it did not suppress its all-time 200-day moving average, it's not a done story, in my opinion, for UnitedHealth. So if this stock will have a comeback from here, but this is going to take minimum 1 year, you're looking for a yearly return of 30%, at least 30%. So from 300 to 500, 600, it will be almost 50%, but I don't think it's going to make it in 1 year. So it's going to take roughly 2 years, but in 1 year, 30%, mwah. If not, then hey, it's a good dividend. It has a good dividend yield. It's growing dividends. Although the last time it grew its dividend, it didn't grow it as much. So the growth of the dividend did slow a bit. But UnitedHealth stock for me to buy. Let me hear in the comment section below what you think about UnitedHealth. So I'm not going to go into the other positions. Most of them are bets. Berkshire Hathaway, hey, I would say that this is a buy. Shh. Just my opinion, not financial advice. Anything that you hear here is anything is zero financial advice. Do your own research. I'm just showing you my opinion and my research. So hope you enjoyed this episode. Like, subscribe. Catch you next week and stay safe out there. My name is Novo BM. This was Wealth Time. Bye bye.